Well, instead of stocking up, we are doing stocking up because there's big happenings out in the fields. Good to have you on the show, Todd, Bubba, Horwitz, and I know you have your eyes on the skies and the grains.
Good morning. It's Bubba on the farm.
Bubba on the farm, because you talk to farmers all the time.
I do.
What is going on? Give us the latest.
There's a lot of issues right now in the farming community. You know, with the strength of the dollar, with all the issues that are going on throughout the world. What we forget to look at is, again, a steep drop in commodity prices. And unfortunately, the farmers, they have a lot more money into these crops, so they're going to be forced, if we stay in these ranges, they're going to be forced to have to sell below their cost. And that becomes a bigger issue. Now, I personally believe that probably somewhere down here is probably a real good opportunity. When you start to see a product, now this is not a company, so we don't have to worry about earnings, we don't have to worry about anything else. When you see an actual physical product that we know we're going to keep eating, goes below cost, you're most likely going to start to see some sort of a bounce, and we will find a reason to start to see higher prices, especially if you tie that in with what the Fed wants, more inflation. So we do need some inflation. So I think that looking at the grain space, I mean, especially corn and wheat here, I think if you're a player in that space, that was something I'd be looking to buy. I'd wait on soybeans. I think they have a little bit more room to do on the downside. And the other side of the coin is the cattle. Cattle is now making new contract lows again. And again, what that's telling us is that there's a lot of pressure overall in the outside markets, pushing these markets down, and those are good places to look as well. So you may want to look into some of the agricultural companies, you know, Mosaic, a Potash, or something like that, that will play these, or like I play them to the actual futures.
So let's talk about what you do with a Potash or a Mosaic or a Monsanto. Maybe even you play that one.
Monsanto. You know, Monsanto, I'm not a big fan. You know, it's in that takeover talk, and it's kind of very high price. I think a Potash pays a very nice dividend. And
it's a fertilizer company.
Right, you're correct. It's a fertilizer company that's directly involved in the ag space. They pay a very big dividend. They're priced in the teens right now. That would be one that I do own, and I would put away. You know, this is when I'd say, put it away and forget about it, because I think it's going to be a good player. It's an
investment, not so much a trade.
Right, because it doesn't move enough for a trade. Mosaic is in the same category. Those are the kind of things you look for here that you want to own long term, because if you believe in America and you believe that we're going to continue to eat, these companies are the ones that fertilize the food you're going to eat. I'll
hold up my eating end of that bargain. All right, as far as those stocks too, do they tend to move with the grains? Like when you see lower grains, do those stocks tend to fall and rise?
They do. They do fall quite a bit. They've obviously under tremendous pressure. I mean, Mosaic was at one time over 100. Potash was, you know, once a takeover play out of Canada. Now they're significantly lower, along with the grains, as we've seen over the last few years. They will rise and fall because they will go to demand and where they can go, because they actually have to work on real price discovery of what the farmers can afford to pay for fertilizer, and that's really what it comes down to. So I think those are great speculative plays that you can hold for a long time as great investments, because they're not going out of business, in my opinion.
Well, thank you so much for that update.
Thank you so much. It's great to be here.